Good morning. It's December the 30th, 2018, coming down to the end of the year. I hope everybody's got something fantastic planned for New Year's Eve, and I hope that everybody has a really great 2019. I hope that the crypto prices do something much nicer for us all in 2019 than we saw in 2018. I was just on our Discord chat, and I had reported that I had finished the alerts for the Binance trades. So here we are. Binance alerts updated, and Klaus Rax. Good jobs. I have no idea how you do that work. Great, and thank you. I thought I would just do a quick show of what I'm actually doing for this work as I am getting ready to do the Poloniex reports. So here is the Poloniex watch report, which has all the data. Whether it's a trade, alert, a watch, a neutral, everything is in here. And then we have the Polo alerts, just everything that is marked as an alert status gets pulled in here with a filter. We have the Polo trades, everything that's marked with a hold status. And we have the Polo closed, everything that has been a trade that has finished its cycle. Either it closed at a loss or it closed at a profit. And so what I do every single day is I go through each one of these charts. So I look at Ardor to start off with. It has an alert at 1465 for a springboard entry. There's the screenshot of that alert that I put out just the other day as prices were getting close. So now when I go over to the actual price chart, we can see that prices are even closer to that 1468 or whatever I had as an entry level. So this is what I do is I go in and I look and see it's very close, but it has not yet hit that trade. So when it hits the 1465, then I'll change this to a hold, change this to green, and it'll automatically update in the website and in our spreadsheets here so that they would be listed instead of right now we have Ardor in the alerts. If I go over to Ardor and change this to a hold, and then I go back to the Polo trades. Now we can see that Ardor is listed in here as a hold at 1465. Our stop would be at 1331, which would lose us 9.15% if we let it go down to that far. And right now, if it did open, we'd have an open profit and loss of 6%. So let me go and change that back to an alert since it's not. And then I go on to the next one. So I'm taking a look at basic attention token, which was just turned into an alert at 3804 region as a trend continuation pattern. And so then I go into basic attention token and I look to see did it hit our entry point. If I zoom right in, 13.8 I think I set it on. 3804. So it has not hit the 3804 yet. It has to come up above these levels here. But it's really looking great. Not yet turned into a trade, but still looking great. Really looking like it's consolidating. It's going to be breaking higher out of this. So then I go on to the next couple, the BCH pairs, which I haven't been doing much with. And they're still in between now where it's not a bottom formation I can trade. It's not a continuation pattern big enough yet. And this one is actually looking like a top formation where we've had 3 runs up and it's fading off. So no trades in here for me because it's got the on balance volume weaker each time. Nothing to do in this market. Then I go on to the next one, BCN and BNT. BCN is Bitcoin. I think Poloniex is one of the few exchanges that trades this now. But it is making a 1, 2, it's come back to make a 3. So a break above the 22 Satoshi level would be a buy signal. Not yet though, we'll keep watching it. And then we have BNT, which is the Bancor network token. It is looking great. We have a nice formation shaping up here. Really looking awesome. Let's go see what the entry level is for 17,644. And we go back, we see we're at 16.7. So it still hasn't hit our target entry price yet. We'll still watch it. BTS BTC. Let's go take a look at BitShares. So again, I just look at the chart to see did it make our trading pattern. It's really looking fantastic. We've got such a great divergence in the RSI and the on balance volume. while we're seeing lower lows here. And if you look at the BitShares USD price, this 1, 2, 3 bottom formation has already shown strength, and now the Bitcoin versus BitShares is looking better. So what is the entry price on that? Is 10.58, and we're at 10.26 right now. But if I zoom into the 3-day view, we did get tucked in here since I put that alert out there on the 27th or the 28th. So it did just touch us in. So what I would do then is go and make this into a hold. And then for my own monitoring, I do the color coding here as well. And then I go on and I just keep going from market to market to market, updating them. And when I update them here, they're automatically updated in the website. And so we can take a look at Burst and see if there's anything coming on this one. We had a trade in Burst, but it was closed. So now we're just waiting for another trading signal to shape itself up. So here's the Burst chart. Let's zoom out a bit. And we can see that it is making a nice formation here. Really nice RSI divergence, on balance volume divergence. It looks like it's going to be going higher from here. This is the third time off this low. So we could do a springboard entry and have our price down at these levels and try to catch it at the lowest that we can and get all the profit possible. But often these things result in fake out breakouts and prices coming down. And so even though it could be the time that it's the right time to do it, it's happens to turn into an error so many times more than not that it is prudent to step back to the 12-hour bars, wait for this 1, 2, 3 bottom formation to confirm itself, the moving averages crossover, and then put our trade on so that we're not looking to be jumping in and jumping out, jumping in and jumping out, jumping in and jumping out. We're going to step back a little bit and we're going to wait and keep a longer term perspective on where things have been in the past. And so there's no need for us to rush in on these little movements in here and keep getting jumped in and out, in and out, in and out. Better to wait and be more patient and wait for it to actually change directions before we jump in. And this is something I will be demonstrating with all of these short-term trades that we've been doing since the end of November, middle of November, all the way through to now till the end of December. There's been a lot of these failed trades that have been a little bit of a pump, and then prices pulled right back to hit those stop losses. So next we have Clam, Civic, and Dash. Here's Clam Coin. Clam Coin is a hold at 5,600. It was a trend continuation add-on trade, separate from the first trade we made on that made the great profits. We've bought back into this one, likely on this little spike up here, and we've been holding it sideways ever since at a small loss, which generally is not a good idea. That's not following rule number 1. So if we're still holding at an open profit loss, a little bit of a loss after holding it for this amount of time, it's time to move the stop loss up and be more careful with this. The longer it goes sideways without proving us correct, the worse the opportunity is for us to actually have it turn around and go correct. It should prove us correct immediately, or it's not. Look at all of this negative trading going on here. So in my own personal trading, I would probably just close this position and wait for it to give me a different signal, something stronger that actually goes somewhere as soon as the signal is presented. So 55,246, we'll observe this one. Since it's just a paper trade, we can observe it and study it and do commentary on it. Civic Coin. On the 25th, it was a hold at 1575. Our stop was at 1417. Very close. Let's see what happened. So Civic Coin. Entry was at 1575. Did we hit the 1575? Yes. After we put on this alert or before? December 25th. Let's take a look at the screenshot. So, after we put on the alert, we got hit. So after we put on this alert, after these moves here, we put the alert in so close to the market, figuring that it was going to hit there and go up. But it hit there and pulled back. Where did it pull back down to? The 1370 somethings. So this one is another example of getting in on a wicked in trade, getting out right at the obvious technical levels where prices were pumped up to get people in and then pushed right down to hit their stop losses. Then the prices are going to continue on their way. But it leaves us with another loss in our string of losses. And there are so many that it's just another example of an unattended trade, which means that there was no one here to say, okay, rule number one, it's not proving me correct, I'm getting out. Right? Unattended, and all the way down to the stop loss. So this is giving us more evidence that the patience to wait for that simple trading plan entry is worth the wait. So we're not getting tagged in, tagged out, and taking all these small losses. So now when I do have a trade like that, what I do is I copy the entire row. I go to Poloniex closed sheet and paste that in. Then I take our stop loss and I move it over to our final price. And I put this in there, December, say, 27th. And then I want to clear out these rows and put in the screenshot. So now we have the before and after screenshot for the trade. And so this gives us the data to go back and say how many springboard trade entries were positive, how many were negative, how many turned into a losing trade, how many of them were too close to the market, had their stop loss too close, and go through them all to get a pattern that we can be tracking back and saying this is what we're looking at, this is what we have to change. So once I've done this, now I've got to clear this out, reset, delete the values, and put it back on the watch list. And then I'll just continue down the road like this, and I'll keep tracking everything as I go. And as we have more and more markets, more and more data on the closed trades, we can start to get some patterns to show which ones actually work the best. And I know from my prior studies that this simple trading plan has really great roots in logic, because it keeps you filtered out of these fake out breakouts that did me a lot of damage back in my earlier trading, because I was trading too close to the market with my stops too close, and I was really looking at the 4-hour bars, and I kept getting hit with these fake out breakouts and then prices pulling back so often that I switched to move to trade by the 12-hour bars. And that's the way we were aiming into this from September and October and the beginning of November even. We were still looking all at the 12-hour bars. Then November 14th, everything crashed lower, and we started to zoom in, looking for those small little bottoms. And we started looking at the 4-hour bars and the 1-hour bars and doing the 1, 2, 3 formations from within them. And they do work, except that everybody's looking for those same signals, and we see that the fake out breakouts gets a whole bunch of people who are close to the market, and then the prices get driven down to hit their stop losses. And it's happening so often that the artificial intelligence trading bots are the ones likely responsible for setting this up, and it's just human nature to fall for the bait. It is really fishing for building your portfolio by moving prices up like that. Everybody gets bullish, then you push it down past their stop losses and collect up all of those coins at a much cheaper price. So now I'll continue on going through the rest of these just on my own so that I can go through them quickly, and as I update them, they are updated on the website, and the most recent data will be in there on the 30th. And that's it. That's my tour of how I'm going through these alert updates, and I hope it's helpful for you. Thanks for asking, Klaus. Bye for now.